Welcome, everybody.
Okay, welcome. I'm Jan McDade, partner with Hunt Group LLC. We're glad you're here. Over the next hour, we're going to dig into two documents that your organization produces every year, your audited financial statements and your IRS Federal Form 990. We will highlight what really matters in each of them. These aren't just compliance requirements. In the hands of a donor or a board member, the media, or a watchdog site, they tell your organization's financial story. Our goal today is to help you make sure the story is accurate, transparent, and as compelling as possible. We'll leave 5 minutes at the end for questions, so go ahead and drop them in the chat as we go, and we'll get to as many as we can. For those who want to earn CPE, there will be 4 polling questions that will pop up throughout the session. You will be required to answer a minimum of 3 of those in order to receive CPE credit. With that, I would like to introduce our presenters. Nancy Johnson, an audit partner at Hun Group with over 35 years of public accounting experience serving the nonprofit sector. And Deep Master, senior tax manager at Hun Group with 15 years of public accounting experience working primarily with tax exempt organizations. Take it away, Nancy.
Awesome. Thanks, Jan. Deep, thank you for joining me today. We're excited to present this today. We're going to go over a quick agenda real quick. The next slide I'll show you kind of basically we're looking at, what's beyond a 990 in an audit. Everybody kind of knows you've got compliance issues. Deep, are you able to switch slides or
Yeah,
is it working?
yeah,
Okay, yeah, gotcha. So we want to make sure that you understand there's nuances between the two. So we're going to cover that as well. We're going to go in a little bit of a 990 deep dive and just help you understand like why do you even have so many schedules really? We want to make sure that you're focusing in on the board governance. We feel that that's a really strong area on the 990. It certainly highlights the importance of why the 990 exists. We are going to go over red flags. Everybody kind of asks, like, what should I be concerned about? So we do want to kind of highlight that as well. Um, and then we did put together at the very end sort of a filing checklist, just kind of a quick reminder that you can use as you go forward, as you're reviewing your 990s this year or even next year. All right, well, we have a lot to cover, so let's just go ahead and jump right in. So our next slide is basically, why does it matter? Why does the 990? Why does an audit matter? So we've broken this down into, 5 key really component areas. Certainly we look at financial integrity. Your CPAs, us as CPAs, we are required to be independent. So that certainly does help give you the confidence that you're getting a qualified, an unqualified audit opinion. We want to make sure that you've got a financial integrity. We want to give you the confidence when you're issuing those audit reports so they're not materially misstated. Compliance, certainly, we all have to face those compliance as a not-for-profit. Certainly, the IRS does have authorization to take away your 501c3 status if you were not filing a 990 for 3 years in a row. There's also stiff penalties. So we want to make sure that you're staying on top of timely filing as well as completeness and accuracy of your 990. Certainly program impact. We do want to make sure we're going to discuss a couple of quick topics on like PR. So we firmly believe your audit report as well as your 990 are great tools that you can use to demonstrate your mission, your programs, the great things that the not-for-profits are doing out there. So we really want to help you highlight that as well. Benchmarking is kind of another, we all live that world of kind of those watch groups looking and saying, but at the same time, it's great to advocate if you reach that gold status, that platinum status with Candid, which is, I guess the old guy started now rebranded as Candid. But making sure that, again, you're focusing, you're showing your 990's been timely filed. All those benchmarking things really help put your organization at the top, really to help get some funding. as well. So we feel that that's certainly an important tool that Candid is grabbing that 990 off the IRS website. You also do have the option as a not-for-profit to take administrative control over your Candid GuideStar. You can go ahead and submit those 990s yourself rather than wait for them to go retrieve it. So that, again, put your 990 out there sooner rather than later. So that always helps as well. And then the last component, certainly transparency. We believe in building public trust. Not-for-profits do that on a daily basis. We want to make sure that, proactively your financial statements have a lot of great information, but again, you're giving transparency, not only disclosures, liquidity, all those things that go into place to build, certainly the financial health of the organization, to give that information out there. All right, I'm going to turn it back over to Deep, to go over kind of what donors are seeing.
All right, thank you, Nancy. So I'm going to do a little bit of a comparison between what donors see on the financial statement audit versus the IRS Form 990. So putting those documents side by side, you can see how donors use them differently because they really do serve different purposes in a donor's review process. Now, the financial statement audit tells donors that your numbers are reliable and that your organization has strong financial oversight. It's basically the credibility document. So when a donor sees a clean, timely audit, the subtext is this organization is well managed and has its house in order. Now, timing matters here too. A timely audit signals that leadership is on top of its finances and governance is strong. Delays do raise questions. Donors often ask, if they can't close the books, what else is running behind? What donors specifically look at in the audit is 1, a clean opinion, 2, no unresolved findings, and 3, consistency from year to year. Now, the Form 990, on the other hand, gives donors a snapshot of your finances and your mission. It signals transparency and consistency. It's where they go to understand what you do, how you spend your money, and whether your governance is sound. Timely filing signals reliability. Late filings or last-minute filings can prompt questions about organizational capacity. Now, what do donors look for in a 990? They look to see that the numbers align with the audited financial statements, the mission and program impact are clear, and that governance and compensation are reasonable. So the key takeaway is that these documents should tell a consistent and coherent story. Inconsistency between the audit and the 990 raise immediate questions. All right, I'll turn it over to Nancy.
I don't know why. They don't tell you why.
Yep, Darren. Oh, we have a polling question.
Oh.
All right. The polling question, if you guys want to go ahead and answer that, to get your CPE, that would be great. Okay, so do we want to wait for an answer real quick, Deep, or?
Yeah, we'll just wait for a little bit till people have had the chance to answer.
All right. Does the answer pop up automatically, Deep, or do you need to go over it?
I think once I end the poll, then we'll probably see the answer. I don't see it. I don't see it right now.
All right.
Well, we'll give everybody a few seconds to answer. And end the poll.
I don't see a poll.
Yeah, we tried to put it back up. Yeah. All right. Okay, so moving on. So great. So the answer was basically C. All right. Okay, so the next slide is really what we want to do is talk about what donors are looking for in your audit report. So certainly we've broken this down into kind of the key highlight areas. Obviously, opinion. Do not be alarmed. We do have some organizations that do have modified opinions. Certainly an unmodified, clean audit opinion is the strongest level of assurance that you can provide. We certainly have a couple of situations where you could have a modified opinion would be if you have a departure from GAAP, maybe your fixed assets couldn't be audited or you weren't consolidated. So a couple of things like that. But certainly the gold standard would be your unmodified clean opinion, and certainly timeliness. The audit report does get signed and dated when those get released to the public. So just kind of keeping that in mind, just timeliness certainly helps as well. When you look at your statement of financial position, this is again your balance sheet. It's just a snapshot in time. But we want to certainly, what your donors are looking for is, if you have a high debt, if you've got a lot of liquidity to your organization, they're looking to see really how much is unrestricted, donor restricted. They're looking at your net assets. They're looking at all those components that are sitting on your financial position of like, what is your kind of financial health from an asset standpoint. Some organizations have that big old right of use asset, right of use liability. So that just indicates, do you have a physical space? Sometimes when you don't see that, you might have a virtual organization as well. Certainly when we move over to the statement of activities, your functional expenses, that's really where donors are kind of honing in on like, how much public support are you getting? Are you getting government grants? They're looking for that diversity. A lot of times organizations, the health of it sometimes is having individual donors. They might have webinars, they might have conferences. They've got just a diversity. They might have a government grant. They've got a diversity of revenue that really helps them weather some of those peaks and valleys. We've seen some organizations, as government grants kind of shut down a couple of years ago, they pivoted. So you saw them getting more private funding, some more foundation grants come in the door. When we look at your expense allocations, as we all know, that everybody's kind of looking at that percentage of how much is program out of your total expenses. So that's always a key component that people look at those kind of comparisons to other organizations similar to themselves when looking at those functional allocations. But those are certainly, donors are looking for that information as well. Nobody expects to have 99% program. Honestly, it does take overhead, so don't be alarmed. We usually say anything above 70% program is certainly in the norm. So you get 70 to certainly 95, and we see ranges all over the place. It really just depending on the industry of which type of not-for-profit you are, and whether you're in an active capital campaign, you might have a higher fundraising percentage. So there's a lot of variables in there, and those percentages can fluctuate, although a lot of times consistency helps as well. And then certainly your notes to the financial statements. A couple of years ago, we had like the liquidity footnote come into play. That was really letting organizations take out those physical assets that you can't spend and take out those ROU assets and liability. And let's look at like how much did the organization have to continue to grow going forward. So that was really certainly an impact that organizations felt, seeing that footnote in there on liquidity, making sure the organization was strong and healthy. We certainly looked at that. The other key components to footnotes, certainly covering, certainly accounting policies. But then a lot of times donors may look to see, they're looking for that risk and contingencies footnotes. They're looking for concentrations. Do you have one donor that's, encompassing 60, 70% of the organization's revenue? So those are some really key financial statement footnotes that really go into play on transparency of your audit, but those are some key areas that the donors might be looking for when they're looking at these audit reports. Certainly, timeliness, as we mentioned before, because your audit report is dated, and it's a matter of how quickly you can, release that audit report. Honestly, a lot of not-for-profits kind of are in that mindset of trying to get the audit report out the door. But if you're a December year-end, somewhere between March and June, certainly we have some that get delayed for different reasons. Sometimes you might get the audit done early, but then because of your board meeting cycle, it might go out a little bit later. but that certainly helps to, show that you've got the strong discipline of getting your audits done timely, getting those out to the donors. Some donors will accept 990s. Certainly you might have to have an audit report attached to your charitable registration, and the charitable registration can get extended if your 990 gets extended. So those two kind of go hand in hand, but certainly they both go out to when you're doing charitable solicitation registrations. So keep that in mind as well. All right, so going on to our next slide, I'll turn it back over to Deep.
Great. Thanks, Nancy. So this is one of the most important mindset shifts we want you to leave with today. So your 990 is not just a required filing by the IRS, it's also a public relations document. So websites such as GuideStar, Candid, and ProPublica's Nonprofit Explorer are where 990s of every US nonprofit organization is posted, other than the IRS website. They all pull a copy of an organization's 990 directly from the IRS. The 990 is typically posted within 60 days of filing. And donors review the 990 before making grant decisions. While journalists use it when writing about nonprofits, and then watchdog organizations flag any outliers they see on the 990. So every section you complete is an opportunity to tell your story to the best possible extent. Now let's talk about the 3 areas on the 990 where this matters the most. So first we have the mission statement. So page 1 has a short field, which I do recommend using. You can put a shortened version of the mission statement there, but I recommend be crisp and specific. Then on page 2, you get a full narrative. You use that space to articulate not just what you do, but the impact and why it matters. Now, second, we have the program accomplishments. This is your chance to quantify impact. And you basically can describe how many people did you serve and what outcomes did you achieve. So for example, if an organization served 4,200 families in a handful of states, let's just say that, I would put that in the program description. Typically, vague descriptions don't impress anyone. Third is the nature of operations. The nature of operations section should align with what's in your audit. Reviewers do notice inconsistencies between the 2 documents. So the takeaway here is when your team is completing the 990, think about the reader on the other end. And best practice is to post both your 990 and your audited financial statements on your website, or make them available upon request very easily. Transparency does build trust. All right, so now I want to go into some key schedules on the 990. These 4 schedules listed here are the most commonly prepared, especially with 501c3 organizations, and then the most commonly reviewed by any third party who looks at an organization's 990. So we'll start with Schedule A. Schedule A is your public support calculation, which is required to be completed by all organizations exempt under a 501c3. For most public charities, you need to demonstrate that at least 33.33% of your support over the past 5 years comes from the general public, as opposed to just a handful of donors that donate every year. As tax preparers, we track this percentage every year. So if you're getting close to that threshold, you have the option to apply the facts and circumstances test, which does give you some flexibility, but it does require documentation. And if you fall below the facts and circumstances threshold, then you do risk reclassification as a private foundation. Now we have Schedule B, which is your list of significant contributions. For public disclosure purposes, Schedule B gets a redacted version, meaning that names and addresses of donors are removed from Schedule B. Additionally, the excess contributions list from Schedule A does not appear as well. This is important to communicate to major donors who may have privacy concerns. Then the next schedule is Schedule D, which is where we report supplemental financial information. The most common sections that are completed are the endowments on Part 5 of Schedule D and the reconciliation of revenue and expenses on Part 11 and Part 12 of Schedule D. Now, for the endowments, we report only the endowment. We not only report the endowment activity for the past 5 years, but we do report the percentage of endowments that are allocated amongst board designated versus temporarily restricted versus permanently restricted net assets for the current year only. On parts 11 and 12 of Schedule D, we complete the reconciliation of revenue and expense per the audit versus per the 990. There are items that are recorded on the financial statements as revenue or expenses that are not included with revenue and expenses on the 990. The most common items included in this reconciliation are unrealized gains and losses, donated services, and special event expenses, just to name a few. And then the last schedule on this slide I want to discuss is Schedule F, which is for foreign activities. So we know that increased IRS scrutiny is coming in this area. It involves fiscal sponsors, government grants, and organizations that make grants internationally. Schedule F requirements may change, as Schedule itself hasn't changed since the last redesign of the 990 that took place more than 15 years ago. So stay tuned for updates on this. So continuing with common or key schedules on, okay, well, looks like there's a polling question. Is everybody able to see the polling questions?
This was basically just a quick check with you and see what your organization's doing with your 990s. So like I said, it's a little bit of everything these days. Some file early, some file on time, some file a month after they get their audit done. So yeah.
Right. Yeah, so it looks like there were a variety of answers here. There's no one correct
Yeah.
Correct answer. And we see a lot of clients. There are some clients that file before the extension deadline. Some will file shortly after the extension deadline, which is usually what I recommend. I definitely don't recommend filing within the last month before the extended deadline. Right. Okay, so moving on to some other key schedules and common schedules that are filed with the 990. So we have Schedule G. So Schedule G covers fundraising events, galas, awards dinners, and golf tournaments, just to name a few. The important technical point is that you would report these events on both the face of the statement of activities and on Schedule G, Part 2. Then you have Schedule I, which covers grants and assistance given to domestic individuals and domestic organizations. So all the grants must be 100% program related, and you must include the selection criteria description at the end of Schedule I of the 990. And then additionally, grantee organizations who received more than 5,000 in grants from the filing organization are reported on Schedule I, Part 2. Then you have Part 3 of Schedule I, which covers grants to individuals. Part 3 will present the type of grant or assistance, how many recipients were there, and the total dollar amount given to all recipients. Names of individual people are not disclosed on Schedule I, Part 3. And just so you know, the entire Schedule I will appear on the public version of the 990. Nothing from that schedule is redacted from the public version. Then we have Schedule J, which is not only a compensation checklist, but it does report compensation amounts for certain employees. So typically items such as bonuses or 457F deferred compensation plan contributions must be included. We do see those missed sometimes. And then with Schedule J, there's also a calendar versus fiscal year timing issue, which can get a little tricky. But compensation is always reported on a calendar year basis of the 990, which can create confusion when reconciling to payroll records. This is mainly an issue for fiscal year filers. So if you're a fiscal year filer, in order to determine which calendar year compensation to report, you would determine it based on the first day of the fiscal year and use that calendar year. So for example, if an organization has a June 30, 2025 year end, you would report calendar year 2024 compensation since the fiscal year began on July 1st, 2024. Now, the final schedule I want to discuss is Schedule N. So Schedule N is triggered when you have a greater than 25% decrease in net assets for the current year. The narrative explanation is crucial here. So proactive, clear communication is far better than leaving reviewers to draw their own conclusions. All right, so Nancy will discuss some of the red flags here.
Yeah, so a lot of times with the board, especially at your annual meeting, they always kind of ask when we are presenting a 990, are there any concerns that we should be aware of? So internally here at Hahn Group, we've created what we would consider to be red flags. And a lot of times, both the IRS, your watchdog groups, other organizations that are looking at your 990 also kind of consider some of these red flags as well. But again, every organization is a little bit different, but we wanted to highlight a brief list to you. Certainly the one thing is board policies. There is a specific section of your 990 that does specifically ask, do you have a conflict of interest? Do you have whistleblower? Do you have document retention? When Sarbanes-Oxley came out years ago, we were basically saying, oh yeah, not-for-profits are exempt except for these particular things. So we want to make sure that those things have been adopted by your organization. Check the box, yes, that you have those in place. Excessive unusual compensation, executive compensation, really depends on each organization. If you have a board members, you have an officer that's highly compensated because they're a lawyer, they're really high level, basically equivalent to an industry. Do not be concerned about that. It's basically industry specific on that organization. So we want to just look at certainly the list of compensation, but we do kind of check that. There are thresholds where you reach a certain dollar threshold that you do have to report that separately. But certainly we want to make sure that your board and certainly your compensation committee, you've gone through the proper processes and documentation of how you determine that compensation. There are certain specific questions in the 980 that asks, what is your board proceed, what their process is for developing compensation for the executive team. Certainly, like we always say, well, let's not put too much under miscellaneous income because somebody's going to ask what it is. So just got to be aware of that. We try to, give more clear descriptions anytime that we drop something down on your revenue schedule that we would consider it to be miscellaneous, but we try to say whether it's rewards, whether it's an unusual, refund of, earned income tax credit, something like that. We want to make sure that we give a clear description on that. Certainly board members, we try to, most of our not-for-profits do try to have independent board members. Every now and then you might have, your executive team, also your your CEO might have voting privileges, and then if they're getting compensated, but they also have voting privileges, then they would be considered not to be independent. But certainly we look at that percentage. If you're only having, 4 out of 5 are not independent, that certainly could raise a red flag for the organization. So we want to keep in mind of that as well. But certainly we look at these things, committees, it really depends on the size of the organization. If you have a super small organization, it might not make sense to have committees. But certainly the large organizations do have executive committees, they have audit committees, they certainly might have a finance committee as well. So checking that box that your committees do maintain minutes, that is certainly a key governance best practice that we obviously look for, both on the audit side as well as the 990 preparation side. And then the other thing is, a lot of times organizations say, well, I'm not really fundraising. I'm not, we're doing it volunteer board wise. But we want to just make sure sometimes that you do need to have some type of fundraising if you've got a large percentage of your revenue being driven by contribution revenue. If you're the flip side where you're saying, oh, I've only got a government grant, that's the only revenue source I have, then you might not have fundraising. But certainly if you're reporting a Schedule G, and you've got a gala, you've got a fundraising, a walk or something, then we do really expect to see those fundraising expenses come into play. So we just want to make sure that these are, again, topics that we internally have developed, that we review. Certainly each time we prepare a 990, we're making sure that we can give the public the best presentation, the best practices, and that none of these red flags have popped up on your 990. All right, so back to Deep to go over financial signals. But we have first we have polling question.
All right, polling question number 3.
So which of the following would you consider the most significant red flag on a 990? All right, Deep, you want to close it out?
Sure. So the correct answer is D. All of the above are equally serious to most funders. Move on to the next slide. All right, so I want to share a framework here that's very useful for understanding how donors not only evaluate your how they evaluate your financial health, because it's not twofold. So there's a spectrum, and there's a spectrum here, and knowing where you sit on that spectrum helps you anticipate questions and helps you prepare proactive narratives. So let's think of it as 3 zones here. The first zone is what builds donor confidence. So these are signals that make a donor feel comfortable. So they have at least 3 to 6 months of operating reserves, diversified revenue streams, and a stable donor base, regular surpluses in unrestricted net assets, minimal or well-managed debt, and building capital reserve funds. If you can check most of these boxes, you're in a pretty strong position. Now we have the middle zone here, which are areas that donors watch closely. They are areas that aren't disqualifying, but do prompt follow-up questions. So you've got 1 to 3 months of operating reserves, frequent budget variances, over-reliance on a particular funding source, break-even or small deficits, dependence on short-term debt to fill gaps, periodic payment delays to vendors or staff. Now, these don't necessarily prevent funding, but they do require good explanation. Now, going into the third and final zone, which are the real red flags here. So these include severe cash shortages, ongoing operating deficits, a majority of funding that's donor restricted, using restricted funds for operations, inability to meet debt obligations, and dependence on fundraising to meet basic operating costs. Now, the key message here is whatever zone you're in, proactive communication is always better than letting donors draw their own conclusions. So if you have challenges, own them and explain your plan. And the bottom line here is to make sure you can document and explain why there are any material differences between the two. Your auditor can help prepare that reconciliation.
All right. Well, speaking of reconciliation, most oftentimes you are going to finish up your audit report. You'll have the board approve the audit report, and then we proceed to drafting your 990. So they always don't necessarily come at the same time. A lot of times we're gathering all that information as we're doing the audit in order to help prepare our 990. But we do frequently get the question of, well, wait a minute, I just got my 990 and I'm looking at my audit report and I'm seeing a couple of variances. How do I explain this? How do I explain it to my board? Board members are like, well, wait a minute, those numbers are not the same. Why on page 2 do I have this huge cash receipts number? So we wanted to kind of explain a couple of things that are causing these variances and just help you reconcile the two things. And one is originally on an audit report, we're going to show net investment income, and we're combining that unrealized and realized as part of net appreciation number. And a lot of times it's going to be shown in your revenue section. Sometimes it might be non-operating, but inevitably we are going to combine those two and we're going to net it with investment fees. The IRS and then decided, no, we don't like that theory. We want to take that unrealized and not show it as revenue, but show it as a net asset reconciliation. So that is by far the number one. If you have a significant investment portfolio, you're seeing a difference between unrealized, gains or even losses, that they are going to be shown completely different on your 990 versus an audit. Those investment fees as well. According to accounting standards, we're going to net those investment fees against all the revenue. So your interest, dividends, unrealized, and then we do less the management fees. That's shown as one net number. The 990 grosses that back up and says, no, expenses go over here. They get reported with expenses. So those get completely reported differently on an audit versus 990. The other items happen to be donated services. Certainly on an audit report, we love if you get a lot of volunteered legal services, or even if you're getting some outside additional professional help, that we count those donated services on your audit report. They get backed out on your 990. So you'll see that revenue and expense, both of those come off of your 990. Anytime that you have even free rent, free facilities, it'll come off your 990. Now, donated investments will actually get highlighted on your 990, and that actually does go on it can go on your Schedule B as well. So we wanted to make sure that we highlighted a couple of those key differences. And then the other ones are going to be things like special events. It's certainly a gross, your audit report might show it net if you have an event. So net of those event expenses. Same thing with cost of goods sold. Your 990 likes to show them separately, whereas they might be shown differently in your audit report. And then statement of functional expenses, certainly we do the build out of the full matrix in your audit report. We're showing you all the natural categories. We're showing you program G&A. What happens sometimes on an audit report is you might have a little bit more condensed. It's easier to read on an audit report. You might have a line item, for instance, professional fees, which might encompasses your audit, your accounting, your audit, your legal fees. All those things get grouped into professional fees on your audited financial statements. However, the 990 has specific line items. They pull out insurance, for instance, and then that might get grouped in with office expenses on the audit. So again, it's a little bit of grouping. We do make sure that in total, your program expense column, your management and general column, usually those two column totals will match your audit report. We do certainly start with the audit report when we're preparing 990s, but those are just some good examples where it's just a little bit of a nuance between how the IRS came out and requested some very specific line items that they wanted to see on the 990. So again, we've helped organizations before when they go to board meetings and the board is reviewing it, to just kind of give them a cheat sheet at the end of the day to say, this is the numbers on your audit, here's how it reconciles, here's where it got reported a little differently. So we are always happy to help with that question as well. And then again, as I mentioned, like page 1, your gross proceeds is not just your revenue, they literally count all the times you sell securities. So if you have an investment portfolio, they're showing those proceeds from sales as part of your cash receipts. Kind of a quirk on that IRS 990. We certainly don't report it that way on the audit report. But we certainly wanted to highlight that there are some of these differences, and that does make a difference to make sure you understand what is going on between those differences. All right, so the next slide is basically going to be turn it back over to Deep to go over a couple of other concerns with the 990.
Right. And it looks like our fourth polling question has popped up.
Hopefully everybody's able to get some good CPE today. All right, Deep, you want to close out the polling question and then we'll work towards wrapping it up so we have time for questions.
Sure. All right, I'll go ahead and share the results here. So the best answer here is B, explain it proactively. The deficit reflects timing of restricted fund releases, not an operational weakness. But yeah, emphasis here on the explain it proactively. All right. With that, I'll move on to the next slide. So I want to cover a few items related to revenue and fundraising that come up frequently. So fundraising events, I know we've discussed this quite a few times today. So these include galas, benefit dinners, and auctions, just to name a few. These need to appear on both the face of your statement of activities and Schedule G Part 2. The gross receipts rule applies, so you report the full amount raised, then the expenses separately. Now there's professional fundraisers, which is also reported on Schedule G, but it's on Schedule G Part 1. The 990 definition includes consultants who help you develop fundraising plans and strategies. It does not include staff or volunteers who actually solicit contributions or other major gifts. Then you have Schedule A, which is the public support test. For this, I would watch your percentage annually. If you're trending downward, I would start the facts and circumstances documentation right away and not when you're at 33.33% or below. And then on the revenue page, so I know Nancy discussed this earlier. So the gross receipts line on page one of the core 990 includes gross proceeds from any asset sales, not the net gain. So a large asset sale can make your gross receipts look much larger than your actual operating revenue. So context definitely matters here when you're presenting these numbers to the board. So again, it's important to be transparent when going over certain sections, these sections of the 990 and any revenue considerations here.
Yeah, and it's certainly Deep. Maybe want to, before we move on real quick, do you want to talk about certainly the facts and circumstances we mentioned a couple of times? It's really, as Deep mentioned, we only start to kind of look at it if you're hovering around 40% or so. But we internally, again, we're tracking your percentage each year. But Deep, do you want to cover real quick just what that facts and circumstances means, just in terms of disclosure?
The facts and circumstances. So this disclosure would appear at the end of Schedule A. if your public support percentage is falling between 10% and 33 and a third percent for 2 consecutive years in a row. So that facts and circumstances is basically explaining why your organization functions as a public charity. So you would mention talk about the programs you conduct, how you solicit contributions, and you also want to prove to the IRS that your governing body, i.e., your board members, includes a variety of people who are not related to each other and have different come from different backgrounds and have different types of expertise. So at the end of the facts and circumstances disclosure, we do typically include bios of all the board members just to prove that that there is that your organization has a diverse governing body.
Okay, thanks, Deep.
Right.
Okay,
Thanks, Nancy.
so yep. So our next slide is basically going to talk about certainly some IRS scrutiny and public disclosure. I'll let Deep kind of finish this up.
All right. Yeah. So yeah, I want to discuss this for a few minutes because this is something that's been on our radar. It's been on our radar for a while, since the end of April. So we know that from the IRS there is increased scrutiny coming. So when the IRS released news about this, they mentioned that the focus areas for changes within the 990 are fiscal sponsorship arrangements, government grants, and outbound grant making activities, particularly foreign grants. So Schedule F, which is where we report the foreign activity, there might be changes to how that schedule is structured. So if your organization operates in any of these areas, in addition to the foreign activities I mentioned, this is the time to make sure your documentation is airtight and your processes are clean. Now, I do want to touch upon public disclosure requirements again. And I want everybody to be clear that what the law requires is that on your Form 990, Schedule B would not include any names and addresses of the donors. And also the 990 is made available online, not just through the IRS website, but through other websites such as GuideStar, which is now Candid, or ProPublica's Nonprofit Explorer. In addition to the 990 being open to the public, documents such as the Form 1023 or 1024 application that you submitted to the IRS when you were applying for exemption, that's required to be made available to the public. Additionally, governing documents must be made available to the public upon request, though you're not required to post them online. From our point of view, our best practice recommendation is to post your 990 and your audit report on your website. This signals openness and transparency that donors respond to very positively.
So basically, our last talking point is going to be about board governance. We feel that this is a very strong section on the 990. They're looking for best practices. So the boxes that you can check are really great. Certainly, the requirement is the question is, did you distribute the 990? It does not say that you actually have to get feedback, you have to take attendance, you have to take a pulse check on whether the members are actually reading it or not, but it really just asks the question, did you distribute it? Best practice would be that you would give them an opportunity to respond to you with any edits and questions, but that is one of the questions that the 990 specifically asks. So wanted to let you know about that. Certainly you can just email it out. Some organizations have portals. If you put it out on the portal, then the board members will see it is there as well. Certainly we take an emphasis on the board listing accuracy, making sure that you encompasses the members that are there at year end, that their names are spelled right. I always joke about that, making sure that it is a complete People kind of ask me like, where did you get this 1 hour from? And it's really just a combination of looking at, if you have a board meeting that only happens every couple of months, the question is how many hours per week. So we really just divide it up. So typically at a minimum, we'll report 1 to 2 hours per member. Obviously, you might have some members of your board that are spending a significant amount of time. If your treasurer is deeply involved in reviewing expenses, really looking at different things. Similar, your board chair, your board president is going to probably spend a lot more hours with the organization than some of the other board of directors. So just again, that's just a highlight of looking at that board list, making sure it is accurate. Certainly, if a board member was compensated a stipend for attending a meeting, that would need to be disclosed as well. And then certainly Schedule J, again, it's a little bit of a nuance at the IRS. They want your W-2 information reported for any of those members, but it also wants you to split between a bonus versus the regular salary. So a lot of times we will put that in the extra information that the bonus was approved. There was an approval process in place. So that always helps to just emphasize the processes that went through. And then certainly, again, it's that W-2 reconciliation and making sure. And then some organizations don't realize that when we're doing a Schedule J, it actually has that benefits column over there. So anytime that you've got, 457 plan, you've got 401k plans, those employer contributions get reported as part of their compensation. So we have built out a great spreadsheet that helps us track all of this. As Deep mentioned earlier, it does a little bit step further when you have a fiscal sponsor or fiscal year end that's a June 30th versus December. We're doing it both ways. We're doing salaries and compensation and benefits both on a calendar basis as well as on a fiscal basis. So we want to make sure that we capture both of those accurately on the 990 as well. But certainly this is one of the areas, board governance, best practice to make sure that all those boxes are checked, that you have all of the great policies in place. So our next is I'll let Deep cover just kind of our final slide, just giving you a quick checklist.
Right. So based on everything that Nancy and I have gone over today, we do want to leave you with something actionable. So we've provided a 10 item pre-filing checklist that you can take back to your team. Number one is your mission statement. Is your mission statement compelling and current on both pages 1 and 2 of the 990? Number 2, do your program accomplishments include the number of people served and measurable outcomes? 3, have you verified all board member names, titles, and hours for accuracy? 4, can you answer yes to Part 6, Section B, line 11B with documentation? 5, have you monitored your public support percentage on Schedule A of the 990? 6, are your fundraising events reported on both the face of your statement of activities and Schedule G of the 990? 7, have you documented the reconciliation between your audit figures and your 990 and what the differences are? 8, has Schedule J compensation been cross-checked against payroll, including bonuses and contributions to the 457F plan for any who are participating in that plan? 9, is your public disclosure version ready with Schedule B names and addresses properly redacted? So this way, if a third party is specifically reaching out for a copy of your 990, you can provide a clean public version to them right away. And last but not least, for calendar year filers, are you on track to file between March 15th and June 15th? I do recommend sharing this with your finance team and your executive director as well.
All right.
Right.
So We're going to open it up for any specific questions. I know we just had a question asking how much of a red flag is it if your mission statement changes. It's really fine to change. Organizations evolve over time. The one caution that we have is if your activities significantly vary from where you originally started in your 1023. So that's really a monitoring tool. If it does change, then there are some additional disclosures. Deep, I don't know if you want to go into a little bit more detail on if the program changes significantly. And
Oh yeah, so there are questions on the top of the second page of the 990 on part 3 that asks either if any programs have been introduced or ceased to exist, or if um, or do you change the way your programs are conducted? So you can answer whichever question appropriately as yes, and then add a disclosure on Schedule O explaining the change in your programs or your mission.
yeah. So then the next question is, we will be distributing the deck out to everybody in attendance. You'll be able to download that pre-filing checklist. We are more than happy to help you with that. And then you'll be able to see all the other information that we provided to you as well. And then there was a question about what do we mean by like clean, unclean, and then if you have a significant deficiency. They're really two different things. We typically only reference a clean, unmodified audit opinion, and that would be the very front of your audit report. That is the audit opinion itself. Whereas anytime you have a deficiency would be an internal control. They're completely two different things. We do not opine on internal control. Those are just things that bring to light to the governance team. Do you have a deficiency in internal controls? And we provide some recommendation letters to you. So I wanted to just help answer that question real quick. All right. Any other questions that we can help you with? If not, we are super delighted that you have joined us today. Han Group does try to give out these roundtables every month, so stay tuned. We try to advertise it certainly well in advance, so you can put this on your calendar. So we're super excited for you to join us, and feel free to send Deep and I any additional follow-up questions that you might have.
Thanks, Deep. Thanks, Nancy.
Thank you,
All right,
everybody.
thank
Thank
you.
you for attending.
Oh, I think we do have
Yep.
another. Oh yeah, we do have another question. How is revenue and expenses reported in the financials versus the 990 fundraising events?
Yeah, so certainly your audit report, you've got 3 different choices. You can certainly net it. It does have an option. You can do it. You can provide that information in the footnotes. Whereas on the 990, they do want it grossed up. They want to show those gross receipts and then gross event expenses separately. And it does have a reconciliation. Yeah.
Yeah. Right. I mean, I think that's it.
All right. Thank you, everybody. You have a wonderful day.
Okay, thank you.
Thank you.